I'm Jim Czek. You're watching Kelowna Now. I'm here with Jerry Redman. We're doing the REMAX Report. And we've got special guest again returning, Marlon Lasik, CIBC Mortgages.
You got it.
Big mortgage broker, because why not? Rates dropped a half point. Why not have you here, right?
That's what we're here to talk about today.
You're the one that caused it all, right? You called Tiff up and you said, drop that rate, man. We got to get some business going.
Trying to save everyone some money.
There you
Exactly. So Marlon, half point. What does that mean?
Means more groceries for everyone. So obviously half point works out to be about $30 for every 100K borrowing. So definitely a big drop, which we've been expecting. In December, hopefully we get another 0.5% drop, which would be nice. So kind of keep that trend going. Yeah. But yeah, obviously it's been a nice break over the last few months. So.
Mm-hmm. In total, we've seen about 1.25% drop in total in the last 4 months here, 5 months. And overall, that means quite a bit of difference in the mortgage right now for people that have had those variable rate mortgages and watched their mortgage climb. How much has it really affected them or helped them out on the downside?
Tremendously. Like in terms of qualifying, when we put it into perspective, like last year, for example, we were at like for every 100,000 of borrowing, clients needed almost like 28 to 30,000 of income for every 100K of borrowing, right? And now we're in the low 20,000s. We're like around 22 to 23, 24,000, depending on the rate. So obviously on the fixed, we can qualify for a little bit more, but now that variable is coming down, we're kind of getting closer and closer, not that huge discrepancy between the two.
Mm-hmm. So maybe we could throw up that slide on the screen just showing a little bit about what the changes have really meant to people on it here. So as you mentioned, we're about $595 a month for every 100,000 we borrow is where we sit today. And with the rate drop, every quarter point that it drops, you're saying is $15 a month will come off that mortgage payment.
Yeah, it's like 14 something, but just for simple math, I always just round up 15. But yeah, so $15 per 100K. So $30 or $300 per $1 million mortgage based on that last half a point drop. So
excellent. Going to make things a little bit easier. And if you've already got that variable rate mortgage, your payments will drop as you do this, which will allow you to do a bit more stuff for sure. So just to show the example there, prior to the rate drop, and this is not the last rate drop, but this was at the start of the rate drops we had a 1.25% ago. Your $1 million mortgage was almost $740 a month more than it is today. So
that's the whole 1.25.
That's the whole 1.25. Yeah. Right?
And just think if it comes down even more, if we start to see more relief, right? So $740 a month for a family means a lot.
That's like 3 bags of groceries.
But no, it's
not if you don't have any meat in it.
But no, it's definitely a game changer in terms of
for sure
cash flow. People with rental properties now, that's definitely helping out, and for qualifying for first-time home buyers, right?
And there is a big thing coming up December 15th too, right? Just to get people into homes too. Like there's that 10% down, right? If it's under $1.5 million, right? As opposed to.
So anything above 500,000, it's 10%. So for example, on $1 million purchase, if you're getting an insured deal, you'd be putting minimum 75,000 down. So 50,000. So 10% on the 500. And 5% on the original 500.
But isn't there like that was capped out at $1 million though? But
it was capped out, but now they're moving up to 1.5.
Because a lot of homes in Kelowna are over that $1 million mark, right?
So if you were to buy some for 1.5, minimum down payment would be 125.
Right. And the other thing that's coming in too in December is the 30-year amortization starts in December as well, right?
Correct. For first-time home buyers or if you're purchasing a new property as well.
So there are restrictions for them for sure, but it does open up the opportunities for people to, step into the property they really want as well.
The good news is the Bank of Canada has said, and so has the U.S. government said that their target rate is around 2%, which we were below last time, and that they say they want to get the target rate to 2%, which would mean another, it's at 4. It's quite a ways to go, right? So for them, right? So
the forecast, what I'm reading and we're seeing now is upwards of another, 1 to 1.5% of the Bank of Canada rate might come down in the next 6-8 months. So, which will make a huge difference. I mean, if you think about it, we're down at 1.25 points now. We go down another 1.25. That's $1,500 a month off that.
We should see some activity in the spring then. Like people should start entering the market and maybe taking a variable and just kind of like locking in as it gets lower.
I'm starting to see a bit of an uptick, like people kind of starting to get in that buying frenzy already, just getting pre-approved. But yeah, it's definitely making a change.
For sure. And I don't think, we always come into a bit of a slower market in the winter months anyways. So I think a lot of people if we see that half point in December, I think that's going to really take our spring and send it off to a little bit, definitely a lot more activity we've seen over the past year for sure. There's no doubt about it. There's lots of people that are, working with buyers that are, there's no urgency. They're waiting for rates. The nice thing is right now, the buyers have a lot of choice.
Yeah, and so you can take your time, get that inspection, not like before, right? No inspection, just
just
take it or not.
No subjects.
And wait for that perfect house to come along as well, right? They're not, you're not lined up 20 people deep to see that new listing that hit the market on yesterday or last night, right? So definitely a much better time for the buyer, and I think the next 6 to 8 months is just going to improve that for the buyers.
Yeah, sure.
And then hopefully help some of our sellers that need to sell and change or move.
Because the inventory is higher, right? And just not a lot of activity right now.
Right.
So,
but like we said last time when we talked about a couple of weeks ago, was that prices are still average house price isn't changing.
Yeah,
much.
stable, fairly stable.
Really
right?
stable.
Nobody's really moving down, right? There's no rush to, and I don't think we'll see that as the rates start to come down, right? I think the prices have stabilized likely, and they start to move up if anything.
Yeah, well, you know what? As the buyers come back to the market, there's no doubt about it, and inventory starts to get absorbed again, prices will start to climb again. And we've talked about this at different podcasts that we've done about if you're a buyer, this is the time to be out shopping. You've got motivated sellers. Now, go with a variable rate like Marlon was just saying and ride that rate down for the next 6 to 8 months and then possibly lock in, but take advantage of those sellers that are still motivated because they're not seeing any of that market activity.
For sure. Did you have some other slides that we were going to look at?
Yeah, we're just going to show here basically, what it costs to, so an average single family home in the Okanagan is $1.05 million right now. Your down payment requirements are $80,000. Your mortgage amount would be $970. Put your CMHC insurance premium back on it. You got a mortgage amount of $1,009,000. But so just to show you the difference of this half point rate drop. Prior to the rate drop yesterday, your mortgage payment would have been $63.52. And after the rate drop, you're down to $6,050, which is that $300 Marlon was talking about. But if you'd end up deciding to go fixed, you don't want to run the variable rate play, your payment will drop a little more than $100 on that mortgage payment as well. So definitely some opportunity and seeing things moving to the right direction for sure. And then we thought we'd show the same on condos, which is our next slide. And there's a lot of people talk about condos and, especially first-time buyers, great way to get into the market. Average condo price in the Okanagan right now is $460,000. Well, down payment $23,000, your mortgage amount $437,000, insurance premium that goes on your mortgage, so your total mortgage of $445,000. Your payment right now, you're at $2,700, which you're talking a 1 or 2 bedroom condo. You're paying basically your mortgage rate, what you're paying for rent, if not a little bit less in some areas. So if there's any way that you're looking at it as your renter right now, great opportunity if you've got the ability to come up with that down payment or get some family help to get into this market and take advantage of our condo market, because I do believe we are oversupplied right now in condos and there's some good opportunities out there.
That looks good. That should get lots of first-time home buyers in for sure, right? The down payment is manageable.
Well, and you know what? Lots of families, right now there's, the amount of wealth that's sitting in the baby boomers' accounts that are starting to transfer. And we're starting to just see a lot of that transfer starting to happen before people die, not waiting for, to give this. My parents have been told by their investment advisor, it's better to give with a warm hand than a cold hand, right?
Or you get to see the children enjoy it as well. That's what I always say. Because if you're always going to hang on to it until you leave, then you don't get to see them enjoy any of that and partake in that, right? Because then it's just that they're going to be fighting over it. And you'll be the bad guy, right? Yeah, no, for sure. And it does. It gives them enjoyment to see their kids or their grandkids making those first steps into home ownership and stuff like that. So, yeah, great. Typically, you should bypass your own kids and just go straight to the grandkids, right? Well, you know what? If you're in that age bracket, chances are your kids already own homes and things like that. So a lot of people are doing that. I hear that a lot from people, right? So they're going straight to the grandkids, right? Because just to keep their own kids motivated, right? So
I'm going to save this video for my kids.
There you go. Just hey, what's the advice I got, right?
Yeah, there you go.
You get nothing.
So all in all, I think, all the signs are positive out there. I think that everything we're reading and seeing for future rate cuts are going to just benefit the buyers as we move forward. And folks that are sitting on variable rate mortgages are going to get a little bit more spending money as we move over the next 6 months.
I think the sun is starting to rise in Canada in a lot of different ways. So
hope so.
Just hopefully that you can see the first signs of that sunrise, right?
Definitely.
Better than the sunset, right?
It's trending. It's trending in the right direction
It's
for sure.
definitely trending in the right direction for sure.
Yeah, I think a little bit of hope, right, for sure.
Yep, definitely. So that's it. That
yeah,
kind of wraps us up
there
for
you
the
go.
day.
And we thank you for watching Kelowna Now.